we've seen a drop in diluted headline earnings per share for the first half, and it's to 3.4 cents compared to the 7 cents that we saw in the comparative period last year. Safe to say that it's been a tough year for the company.
From a revenue point of view, our sales tonnages were more or less the same compared to the previous reporting period. Ferrochrome prices went up, however, those were largely negated because of the strengthening of the rand. Where the real pressures were on the cost side. Our operating costs went up by 16%. Big pressure from a cost of electricity point of view, labour costs, as well as mining costs.
We've had those cost pressures really putting pressure on production itself. Let's take a look at that, because ferrochrome production levels down 4%, where in the first quarter we saw those production levels up 3.8%. Are there other factors coming to bear on those production levels, or is it simply a cost factor?
What we saw in the first half of the year, there was a huge amount of demand for ferrochrome coming out of the stainless steel producing countries. China was up by a massive 12%, so those who thought that stainless steel and China was slowing down, it certainly hasn't. And then towards the end of the first half of the year, there was an amount of restocking. We had so many geopolitical events which created global uncertainty. We saw destocking occur, but what was fantastic is the swift and responsible nature in the way that ferrochrome producers reacted. Production was slashed down to about 50%. This normally happens in the winter months when there's a lot of maintenance to be done, and the supply balance is pretty much more or less where it was a year ago, 12 to 14 weeks, optimal stock levels.
What it does do now, though, is leave you as a ferrochrome producer with a fixed cost base that you've got to contend with as facilities operate below full capacity, which you have no choice but to carry at this stage of the game. So just how much pressure is that putting on the business at this stage?
Certainly the fixed cost base is a large amount. It makes up between 20 and 25% of our costs, and we carry those as standing charges. The people are not idle. What we've done is we've moved them into training. We've moved them into some other projects that we're doing, Project Swellepeli, Project Lion. Some people take leave. There'll be no overtime, and we'll carry that through the winter months, and we're very positive about going into Q4, where a lot of furnaces will be brought back into production.
So positive about Q4, safe to say that we're expected to see this weakness roll through to Q3 then?
Yeah, we think the worst is actually behind us. Most of the restocking has taken place. The distribution centres in Europe, the traders in China are short of stainless. We've started to see buying there. We've started to see increases in stainless steel scrap purchases, as well as movements in the ferrochrome spot price. So there are some positive signs, and certainly going into Q4, we believe production will increase as well as demand for ferrochrome.
The last time we chatted, Stuart, Merafe had announced that it would be investing 1 billion rand in an expansion project that had been proposed by Xstrata, which is meant to boost production and reduce costs at the same time. Are things progressing on track on that end?
Yes, certainly. That's our project Lion 2. It's being built in the Steelport area. We've committed 1 billion rand over a 3-year period. It's early days because it's really just started construction, but we're very confident that we'll come in within budget and come in on schedule. But the most important thing about that project, it uses a lot less energy than comparable technology. It's going to create 1,000 jobs, 1,800 contracting jobs as well, and it will reduce our overall costs throughout the group by around about 6%.
You say on budget, how exactly is this going to be funded, and by what means? Because being identified as a possible challenge down the road is that you're going to be increasing your debt position and servicing those costs, with the underlying themes still just only beginning to gain traction, like you say, and, likely to only show that and filter through to your side in the fourth quarter.
Yeah, we've made it very clear to the market that we're not going to be coming to investors to raise more money. We don't foresee a rights issue. Our balance sheet is very strong. We have 366 million rand on our balance sheet. We will have cash flows over the next 3 years with which we can fund that project. And we also have facilities that have been made available by local banks in order to fund the balance of the project. We're comfortable the cash position, future cash flows, debt will adequately cover that.